FAIR plan is regulated by the state of California. It is not funded by state of California. So taxpayers are not paying into that plan at all. I just want to clarify that. It is regulated. Hey guys, welcome back to Bay Area Home Hustle Podcast. I'm your host Parm Rahi with my partner Mike Brown.
Hey guys.
Well, today we're going to talk about homeownership, impacts from wildfires, and also the impact it has on your home insurance. So let's just get into it right away.
Let's go.
All right. So first thing first, let's talk about first-time buyers, or not, maybe repeat buyers, right? So what happens when you're getting into a contract, right?
Right.
What are some of the things that they should be looking to do now? I mean, aside from removing contingencies and getting money ready and purchasing and so forth and so forth.
Before you even close, there are a lot of things that you need to do, right? Whether
Right.
your agent reminds you or not, they know, they will tell you. But
Right.
sometimes, they get caught up with signing paperwork and,
Right.
making sure your disclosures go out and all that stuff. A lot of people sometimes forget that they should shop around for home insurance.
Right, which is sort of the key now, right? It's because of these fires and stuff. Home insurance is going to be a very, I wouldn't say tough, but it's going to be
Challenging.
to find, right? Right.
It's not the same as PMI now.
No. Why don't you tell them the
Okay.
difference between PMI
Okay.
and home insurance?
PMI actually is an insurance that covers the liability of banks when they lend you your money for the mortgage. Because let's just say you put 20% down out of 100%, right? So you say $1 million, you put in 200,000, which is 20% of $1 million, right? So you skip the PMI, but let's just say you don't have enough capital to put in, or it's going to be really squeezing you. So you put in 10%. So the banks need to show some kind of, I guess, insurance or some kind of, to lessen their liability.
Right.
So that they add a little bit onto your mortgage.
Right. The point is to, it's essentially it's covering banks' butt, basically, right?
Yeah.
I mean, in a way, right?
In the end of the day,
what
right.
they're saying is, okay, we'll give you here's the funds to close your property,
Right.
but we need additional insurance on top of that in case you cannot make the payments and in case you end up in foreclosure, right? So that
Yes.
PMI sort of covers it. And then remember, it's a private mortgage insurance, by the way, and it can be removed after you've achieved 80% of equity.
Right.
Some lenders might have different guidelines, but you need about 80% of it, and you can always sort of reach out to a lender when you think 80% is reached and ask them to do another appraisal of your property. And once that happens, it can be removed from it.
You can actually chase your lender to do that. I mean,
Yeah.
after maybe like 1 year later, he says, "Hey, how about removing my
Right.
PMI? Can I do it? Just do that."
Especially with properties in the Bay Area. I mean, they appreciate anywhere from 3 to 4%. In some areas in Saratoga are going like 10 to 11%.
Yep, double digits.
So I mean, it depends where you are, but that can be done. So, but going back to
Home insurance.
shopping for home insurance. So that's sort of like the first criteria. Well, I think it should be like one of the first steps in your home buying process now, right? I mean, after you've submitted an offer, you're in contract. I mean, that's one of the things your agent will tell you, like, hey, you need home coverage, or your escrow officer or title company will tell you the same thing. But you need to shop around right away because
they're not going to do it for you.
Yeah, they're not going to do it for
Yeah,
you. One, they won't do
it's
it
on
for
you, right?
And two, you need it in order to close, especially if you have a loan, right? Remember, no lender is going to give you a loan without home insurance.
Because it's high risk for them.
Right. And what is home insurance? Essentially, home insurance is
covering the value of your home if
Right.
something happens.
Right.
It could not just be fire. It could be water damage. It could be
Right.
something simple like $20,000 of water damage because the roof came down or something like that, right?
Right.
So it's, we're always thinking the worst right now with what's happening with the Palisades and the Eaton fire and all that
Right.
stuff. Yes, I get it. Of course, it's
Yep.
totally, it's
Understandable.
depressing,
It is.
But, but just to cover yourself, home insurance is needed. You go shop around. The
Yeah.
agents might remind you to do that, but to save yourself money, it's best to call around. Now, that being said, the insurance companies have left. Okay,
Yeah.
some insurance companies don't even carry home insurance for certain areas. Okay,
Right. I mean, all the major carriers are gone, right? Even if they are insuring right now, and this is me speaking specifically with the insurance agent the other day. If for instance, like farmers came back and they're allowed to issue one policy per agent per month, which is ridiculous. And I think all the major carriers have very
Uh,
strict policy issuing policies right now,
right.
which makes it more difficult, right, when you're shopping around. So what you're probably going to end up with is another carrier out of state, maybe admitted and non-admitted. We'll talk about that in a second, what that means. But again, going back, you are going to need coverage. It has to be there in escrow before property closes, before you get the keys to your house and stuff and records with the county.
Right. Since we mentioned the wildfires, okay.
Yeah.
You know, I think it was like 12 to 17,000 homes have been destroyed. It's like
That's
a crazy number,
well,
right?
I think the high count was around 1,700 structures. Out
Right.
of that, we don't really know how many
Right,
homes have been
right, right.
destroyed, but I'm thinking it's in the tens of thousands.
Right.
Probably.
So the home, whatever home insurance you buy,
Yeah.
make sure it's covered 100%.
Right.
All right. Even though you may say, oh, you know what, my loan is only so much, maybe I don't need it.
Yeah.
You know what, you're betting on yourself.
Yep. No, 100%. And I can get to a couple other points here in a second, but the flip side of this is if you are a seller. Now, this is another point that you should definitely remember. If you are a seller and you have trees around your house, right? Remember to remove, if any trees are like within 6 feet to your property from the tree to your
Home
structure,
Yeah, structure.
consider removing them if you can. If they're small or something, consider removing them, because insurance companies are looking at that as more of a, because it's become more
Liability.
liability,
Yeah.
right? It's
Yeah.
just gonna make it more difficult for them to say, okay, we can give you coverage.
Or even they give you coverage, the
Yeah.
price is going to be higher than if it wasn't there.
Absolutely. And then also, if the tree's branches are
Oh.
overlapping your property too, like over the top of your roof, again, consider trimming those down as well
Yeah.
too, because that will help you. I promise you. Otherwise, these things, what's going to happen is you're going to go in contract. Some buyer's going to put an offer, and then the buyer's side, the insurance, now they come out and check properties too. They do it with drone, they do it with all kinds of stuff, and they're going to call that condition out. The insurance company will put a condition in it, believe it or not, which was never the case, but it's happening more
And this
more.
is not just in high risk areas.
No, it's not. It's
You
not
know,
just high risk.
it could be any home in California.
Right. And because of these fires that just recently happened in LA and stuff. Remember, we do have a moratorium in place too
Right,
for
right.
1 year. So
Right.
if you are in an affected area where like in LA County or somewhere else in like San Diego, I think a bunch of fires too. Right?
Yeah. Well, I think another one just popped up, right?
Right. They can cancel your policy or send you a non-renewal for 1 year at least, right? But this is not for all of California. Just remember that it's only for those affected areas only.
Right.
And then, yeah, you definitely, so as a seller, consider those points as well too, please, because you don't want to get into a position where it becomes an issue and then you have to tackle it in midpoint.
Let me throw something out there. So if without having all these scenarios like a tree branch over your roof or a big sapling that is 6 feet away from your home, the average cost of insuring a home that's about 800,000, it's $1,600 a year. About that. Okay, so it's not a fixed number. That's what I'm saying.
Yeah.
If your home was over $1 million, of course, and the size was bigger, that the number goes up, right?
Yeah.
So that's just something that's like a rule of thumb that you can work with. But then, of course, you need to shop around. I encourage that.
Absolutely, and that leads into the next point, which is you have to make sure that, and this is true for a lot of folks that bought the homes in the last 3 to 4 years, right?
Right.
If you bought your home, let's say 2019, 2018. The cost of reconstruction has gone up, especially in the Bay Area. I mean, it's all across California, but in the Bay Area, it's really, really high. So if I can give you an example, so let's say if you bought a home for, I don't know, what is homes 4 years ago like?
No, I mean, average was about 7 already, 657.
Let's say it cost $700,000.
Yeah.
That's what your purchase price was at the time. You've got coverage for $700,000. Right. So what that means is if your house burns down, the replacement cost was up to $700,000 for that property, so you can rebuild it back up, right? But you bought that probably, and let's say your home is 2,000 square foot or something, right? average 2,000 square foot. So that means it's going to cost like 300 some dollars per square foot to rebuild, right? Which sort of covers you in terms of rebuilding the place. But now construction costs have gone up. It doesn't cost $300. It's like 400 some dollars now, right? So now if you're coming now and you need to go reevaluate your insurance coverage, you need to make sure that 2,000 square foot home times the $400 that it will reconstruct today. In other words, it'll cost you $800,000 to bring your property back in its conditions. Remember, and this is not including specifics of the property, the windows, the doors, the configurations, the materials, right? All that has to be taken into consideration. So now your cost is higher than your insurance coverage. So then you're at a loss, basically. You're upside down. So one of the things I would recommend is go back and make sure you have enough coverage, or you have the right amount of coverage that it costs to rebuild right now.
And then that's also, I mean, we didn't talk about debris that they need to clean up.
Right.
You need an architect to draw for the drawings, the renditions and the permits. So that's going to be way over 800.
No, that's exactly what it is. So I mean, that all is included in there. But I'm saying the cost of construction is
So you need to reevaluate your insurance. Really.
Right. And then going back to the next point, and next point is that if you have, when you bought the property, maybe you bought it under your own name, and then a year or two later you put it under you put the title underneath a trust or something, right? Like Parm Rahi Trust.com or whatever, or Parm Rahi Family Trust or something.
Yeah.
Make sure that title, or that trust name that you have for title is also listed on your insurance binder. In other words, in that insurance binder, it says on your Parm Rahi Family Trust is covered, because now the title is being held under that. Because what's going to happen is if you get into a disaster situation and then you bought home coverage under your own name, but the title is being held under your family trust name,
there's a discrepancy right there.
Yeah, there's going to be discrepancy. And it's not that, I mean, ultimately you will win, but you're going to have to fight for it. You have to prove it. You have to get.
It's going to take time and headaches. So just skip the headaches and just make sure the name matches.
Right, and especially like if you're looking at a larger area, like all these folks that are involved in LA. Imagine if all of them, having the same problem going all once at the same time. I mean, it's not a situation you want to get into. So please, if you're holding title under your trust, make sure that it is defined in the insurance binder, so that way there's a seamless and sort of cohesive thing to go back and forth.
Right.
And the last thing I want to talk about is will and a living trust, obviously, right?
Okay.
So make sure you have a will. I recommend to all of our sellers when they purchase the property, at some point down the line, if you are going to shift the title underneath a family trust, do that. So create a living trust that instructs what will happen in case of your demise at the end of the day, or something else that's catastrophic, how the property will be passed down to your heirs, your children, right? And also the will is just basically instructions, your specific instruction, how it should be distributed, right? In terms of all your assets.
So very good point, Parm. If you can, you'll go do a living trust. Because if something happens, you don't want to go to probate court. It takes years.
Right. Without those two, you will end up in probate court, or your heirs will. And it just takes time.
Maybe we'll do a show on probate one day. But right now, just to skip all that grief, because it's not, if you're not going to be around, it's not going to be your problem. It's going to be your kids, and the people who's going to inherit.
It's just going to be cumbersome. It's not something that you're going to end up in court. You have to wait for confirmation, hearings, and it's just time. It's just time and money. End of the day. So I mean, I would just avoid that.
Just avoid that, and it doesn't cost that much.
100%. Yeah. And then the last thing I want to get into is, just the general conversation as to so we have fires. Yep. We have all these things going on, right? Obviously, not majority of the California, but more and more coverages are now covered by FAIR plan. We're going to talk about what FAIR is really quick. Do you have a definition of what FAIR is?
No, I don't. It's
a FAIR something plan. I mean, I don't know if you want to look that up really quick. But it's essentially a FAIR plan. I don't know what the actual words stand for. Fair insurance, something, I can't remember. Anyways, so what that is basically, in California, we have something called a FAIR plan. So if you can't get coverage through normal admitted carriers, right? And we'll talk about what admitted and non-admitted in a second as well. if you can get coverage from, let's say, AAA, Mercury, Farmers, or State Farm, on any of these carriers, what you need to do is you need to reach out to an independent broker, not one of these big carriers, but independent broker, somebody like a mortgage loan officer. There's a broker for insurance as well too, who deal with multiple carriers at the same time. They will be able to get you coverage or get you a quote from the California Fair Plan. The Fair Plan is regulated by the state of California. It is not funded by state of California. So taxpayers are not paying into that plan at all. I just want to clarify that. It is regulated, okay? It is regulated and it is sort of instructed or controlled by the state of California and the commissioner. But it is not. We don't pay for it, right? Who pays for it? It's all the carriers that do business in the state of California, all the admitted carriers. Now, the difference between admitted carriers and non-admitted carriers, admitted carriers are the ones that are that go through the state insurance commissioners basically desk, right? And these are the ones that have certain amount of market share in California. So if I can give you an example, let's take State Farm, Mercury, and Farmers, for instance, right? Let's say all three of those guys have 10, 10, and 5% market share in California. So what they do is they are the one that are going to put 10% of their market share. So what they do is they cover 10% of the operating costs for the fair plan, right? So it's all the admitted carriers that pool money into that they have to put money into this plan essentially that provides for California. So, were you able to look that up?
No, it's so weird. I've been
It's
looking
fine.
at it. And anyway,
I will add it in the description.
I want to add something because while I was searching,
Yeah.
there was something came to my head. Now, very good point. If there were 10 insurance companies
Right.
in this putting money into the fair plan, which I think I did was,
That's the
right
reserves.
now we have $377 million to pay claims right now.
So that's the money in reserve now.
From the fair plan. Now, just say one of the insurance companies bails out, says we don't want to cover.
Right.
The burden is on the others, but the pot is lessened.
Right. So, yes, that's true. Okay, but at the same time, remember there's a moratorium in place, so these guys can bail out right now,
Correct.
right? So, but remember, we're gonna have losses in the billions from these fires in LA, right? And it has to be all paid off, right? We have 377 million. That's what we got the information online as of today.
Right.
That's what we have in reserve, right? So what happens when the losses exceed what's in reserve? Well, this still has to be paid out. And this is where the admitted carriers have to come in, and based on their market share, they have to put more money into this fair plan to pay out these claims, right? But then how do they recoup the difference? How will they make themselves whole?
Raise the rates.
They're going to raise the rates. So every single policyholder in California will see their rates go up.
Yeah, and it's
especially
unfortunate.
Once this moratorium is out of the way, the next 12 months to 18 months, or even a year or 2 years, you're going to see your rates go up, right? Because we just don't have enough money in the fair plan to cover all these losses. And I'm not saying that there won't be funds from the federal government and the state government. There will be, but it's just too much. There's just no way for the fair plan to be. There's just not enough money in it, right?
Nope.
And insurance carriers will make your payments.
I don't even know how much
payments.
How much it's going to cost so far.
They're saying anywhere from 35 to 45 billion dollars to rebuild everything in LA. That's a staggering amount.
I still haven't found it, but you know what? Let's forget about that. Main thing is people get to rebuild.
Yeah.
That's how I feel. I mean, the insurance companies, just like everything else, gas prices, they're going to go up.
Yeah.
And that's why we have a insurance commissioner, is going to try to work with them, right? It's going to go up. It's just that let's hope it's not too ridiculous.
Yeah, and then
I mean, we're homeowners. We're going to feel the ding too. Right?
Absolutely. I mean, everyone that's watching this, and if you're a homeowner, I mean, the last 5 or 6 years, you've seen your coverage gone up already, right? Either it went up by 100% or maybe 200%. Expected to go up again, probably by 100%. It's just there's just no way around it. I mean, these wildfires are here. Unfortunately, we're just not doing enough that's needed. I think, in my opinion, this is my own personal opinion, that I don't think we're doing enough to keep our forests clean, and everything, all the utility companies,
Yeah.
there's I don't want to get into the politics of that, but end of the day, not enough is being done from the states level, and so these fires are more real. Every year we're getting
It's not just the fires; it's the winds too. You have no
right.
control over winds,
We
right?
don't, right? And when these things happen, and unfortunately it's suffering, and it's taking away. I mean, look how many people lost their lives in this thing too,
Yeah,
which is even
that's
staggering, I think.
yeah, and it's. I mean, I watch world news too, right? I watch news from all over the world, and like the top five stories in
Fires.
different countries, it's about our fire.
Yeah, it's common theme. I think. I
Yeah.
think it's common theme. And the other thing I mentioned a second ago was non-admitted carriers too. So going back and just quickly add something else as well. So admitted carriers are the ones that sort of controlled and regulated by the state, and they're the one who put money into the fair plan. Fair plan also has a limit as well too, which is $3 million.
Yep.
So if your property is worth $6 million, and let's say you have fair plan because you're in the fire hazard area, whatever, you do have to cover the difference of that property, right? So because remember, the limit's only $3 million, so the additional $3 million on top, you have to get it from maybe a non-admitted carrier. And I'll go into what that is. Non-admitted carriers are just any other insurance carrier that is not regulated
Yeah,
by the
not
state,
yep.
but they provide additional coverage on top, right?
It's like second insurance. That's what it is.
Right, exactly. It's like second insurance. Like we have, yeah, exactly. That's what it is. It could be anybody that pulled in money from outside of California and
Right.
came together and said, okay, we'll cover the other $3 million on top of it. The cost will be higher,
Yeah.
but I mean, if your value is, value does exceed over $3 million, I think it's recommended that you should consider.
It's like a second mortgage, right? The second mortgage is always higher.
Mortgage.
So, but I mean, at the end of the day, it's to protect yourselves, right? I mean, yes, it's going to cost us money, but this is your home, right, guys? I mean, think about when the fires are coming down fast and hard, right?
Yeah.
You don't have time to think. You guys should grab your go bag and go, right? Grab
Yeah.
your loved ones, your dogs, cats, whatever, right? So, some things just needs, I mean, yes, insurance is something we need, right?
Right.
And
it's nothing different than
car
like
insurance.
car insurance,
I mean,
or even life insurance in some cases.
Yeah.
If you have young ones and stuff, you have a life insurance.
and I mean, other than the people that you're living with, that you love,
Yeah.
your home is your sanctuary,
100%.
right? So I would suggest to protect it, as much as you can,
Yep, 100%. And the other, I'm just gonna give out a couple of tips, and you can just
Okay.
jump right in here. One of the tips I would say is, like, if you are, one of those folks that, seeing your home burn down to the ground, right? A lot of these lenders, your mortgage provider, your lender, your servicer rather, they will work with you. I mean, to issue forbearance,
Yes.
right? Just to delay those payments for the foreseeable future. Because the thing is, like, you don't want to be homeless, staying somewhere with family or maybe a hotel or something. And that's next time you have to make a mortgage payment on top of that. So they will listen because you are affected by a disaster, and that does happen, especially if it's held by Fannie or Freddie. They can halt payments.
Also, I forgot to say it before we said so much. Once, if that ever happened to you with the fires, and you've moved on, contact your insurance right away.
Yep.
Because there's going to be claims. I mean, I'm sure the claims are already ahead of you,
Yeah.
but get your claim in.
Absolutely, get your claim in. And the other thing I was going to say is that even at the county's level, like property taxes, remember we make payments 2 times a year.
Right.
That's something you should reach out to your county as well too. If the house burns down to the ground, they should not be assessing you on the structure, right? Because there's no structure left, right? So you should only be paying tax on your land. Only.
Right.
But then again, that can also be delayed. I know they're delaying that on LA right now. I think by as much as 90 days, I think, or 3 months or something. So consider those. Those are your first few phone calls. If you have to, you gotta make it.
Right.
Gotta make those.
Right.
What else you want to add?
No, I think that's pretty much it. You?
No, that's it. That's
Okay.
all I have.
I want to say, guys, I know this podcast is it's not the most funny or whatever.
Yeah.
It's not lighthearted, and we didn't plan it to be like doom and gloom, but we felt that this was something that we needed to share.
Yep.
And again, our hearts and prayers go out to those who have been affected by the fires, who've
Absolutely.
lost their lives and family and loved ones and their structures. But we hope that things will turn around.
Yep.
We'll also pray that things will turn around.
Absolutely. Well, that's all we have for today. Thank you very much. We'll see you guys next week.
Next time, guys.